Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of a stock market rally following yesterday's Fed statement. But first, the number of Americans filing new claims for unemployment benefits unexpectedly fell last week and fell by more than 20% from the same week a year ago, suggesting their labour market continues to strengthen. Big bond investor PIMCO has used former Federal Reserve Chairman Bernanke to help write its outlook for 2015, one that sees higher American growth, a stronger US dollar and muted inflation. Across the Atlantic, the Swiss central bank announced overnight that it will introduce negative interest rates. That just means they will charge depositors an interest rate-based account fee for holding funds at the central bank. Retail bank Credit Suisse said it will only apply to the accounts of big commercial companies. They say they won't apply negative interest rates to savings accounts. Switzerland has been deluged in funds flowing out of Russia recently. In Australia, Woolworths, the owner of Countdown in New Zealand, has told some suppliers it could decide to pull their products from shelves just days before Christmas if they refuse to cut prices and fund the supermarket giant's new cheap advertising campaign. Oppressive behaviour of supermarkets has not been ended by competition authorities, it seems. Benchmark US Treasury 10-year bond yields have jumped significantly today in New York and now at 2.20%. They are 12 basis points higher and no doubt will be reflected in New Zealand interest rate swap markets today. The oil price fell again overnight and is now under $56 a barrel, and the price of Brent is now under $61 a barrel. Traders are picking the supply glut-induced correction will continue, and there was nothing in the Putin speech overnight that changed this view. The gold price is unchanged again at $1,195 an ounce. We start today at 77.5 US cents at 95 Aussie cents, which is a 9-year high and signals lots of market chatter about parity again. And the TWI is at 78.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.